Hello, traders and investors. Steve Gans here, and welcome to the weekend update for August 24th, 2025. As you may have noticed, I'm wearing a little bit lighter shade of protective glasses now. The eye strain is improving. That's encouraging, and maybe sometime before too long, I'll be able to go to almost a clear protective glass. But in the meantime, this is working, so I'm continuing with it. So let's take a look at our action here for this last week. In the SPX, we did have a sell-off that came in here during the majority of the week, but I had put this trend line in here saying that I don't think we're probably going to break that trend line. We've pulled back to that trend line here once, twice, three times, and then we touched on it in the middle of this last week as well. And I just didn't feel like we were going to be breaking that because our volume was not picking up significantly enough to drive, in my opinion, the prices below that trend line. And then, of course, on Friday, we had economic news as well. That drove us right back here to the all-time highs. And it did so at a pretty decent volume bar as well. So those are things that indicate a bullish nature. We're also pulling back into this very, very long-term channel that has been in place. If I zoom out here, that channel was in place for a couple of years prior to dropping out here around the tariff news. But now we're getting back into that channel. And many times that is what will happen, is you'll end up dropping out of that channel over something, and then that channel can reestablish itself. So I'll be keeping an eye on that. But for right now, I'm largely neutral because I think we've reached a point where we might just tend to chop sideways a little bit here, maybe for another 2-3 weeks as the summer winds down. So of course, that's SPX. Now let's take a look at SPY. SPY is going to look exactly the same, except in SPY, we are back firmly in that channel again. So that is good news on that. And then we look at the S&P futures. Again, very similar chart pattern. I didn't mark this one up. I like to have one that just kind of looks clean. But again, it's going to essentially mirror the SPX chart and the SPY chart. And then we'll look at the volatility. So the volatility is the level of fear in the market in stocks surrounding that index. We can see that we are essentially back to a recent all-time low in volatility. So volatility is definitely off. There currently is not fear in the market. People are not buying puts. They're not buying insurance on their long-term portfolios right at this time. Now, we look at the Qs. The Qs are a little bit interesting here. And what I mean by that is, of course, the Qs have stayed largely in this channel for a fairly long period of time. They did not drop out as much as SPX did. But what's really interesting in the Qs right now is while SPX is back at that all-time high, the Qs are lagging a little bit. They did not get back to that all-time high. Their volume, the down volume, was a little bit larger than the up volume. So that's showing a little bit of a weakness right now in the NASDAQ index, in some of those big high-tech flyers that have been continuing to rip to the upside. So whether or not that's telling a little bit of a future picture yet, not sure. But it is interesting that while the S&P 500 is rocketing to new highs, the Qs aren't quite having that same level of move up. Also, we can see that the VIX on the Qs, while the VIX or the volatility is low, it's not back at that all-time low. It still has a little ways to go to get down into that range. So there's a little bit of volatility still left in the Qs also, which is another indicator of, I don't want to say weakness, but of the three indexes, we're going to look at the Russell next. The Qs are probably the weakest right now. Again, I can't call them weak, but they're certainly weaker than the other two. Now, this is really interesting on the Russell, the small caps. So the Russell broke out. That's a significant move. We had a lot of resistance here to breaking out over the past 6-8 months, and we just blew right through that big volume bar. So lots of small cap buying. I think there's some rotation going on, maybe out of those high-tech stocks and into some of the more mid-cap stocks that you're going to find in the Russell. So that's a little bit interesting and something that I think we might see some continuation on. Volatility, of course, in the Russell is almost back down to those all-time recent lows. Not quite there, but pretty darn close. So that kind of gives you an overview of our different indexes and how they're moving right now. So my take going forward here for the time being is that I think we're largely going to chop in a bit of a sideways market. I'm going to call myself neutral to bullish at this particular stage. I do think this large uptrend line will likely stay in place. And I think we're going to kind of form maybe a little bit of a wedge pattern, and that's going to develop over a couple weeks. Ultimately, those, in this case, a bull flag or a bull pennant, many times those do in fact break to the upside. We build the pressure on this wedge, then all of a sudden we'll pop out and take a move higher. But I think we're looking at some sideways consolidation here, probably for another few weeks or so until we get that significant upside breakout again. So that's what I'm seeing right now in the markets. And obviously news can change some of those things, but overall chart patterns are definitely intact and moving higher. So thanks so much, everyone, for stopping by for the overview of the charts for this week. If you like what, please subscribe, give me a thumbs up. I greatly appreciate it. Now, those of you that are part of the alert service, let's take a look at the open positions in the alert service. So first of all, the Flyagonal continues to do very well. It doesn't have its 97% win rate anymore. It did take a couple hits here of trades that closed out about a week and a half ago or so. And those trades brought that win rate down to 93%. I was expecting that. No trade holds up at 97%, but it's still a very good, solid trade. I opened one new one 5 days ago and shared this in the alerts, and this trade is currently up just under 10%. That will likely end up closing out this Monday, assuming that our market stays in a general 150-point range or so. So I suspect that one will close out. This one was just opened on Friday, and it's already up just a little bit, about 2% since that was opened. That one is in the queues. And again, one of the really nice things about the Flyagonal is it appears to work in a wide range of symbols. That's one way that you can tell if a trading system or a trading method is robust. If it works across a wide range of products and a wide range of time frames, etc., that shows strength in the concept or in the idea. So that trade was just recently opened on the queues. Now, I did take this opportunity to open a little bit different type of trade. This one is a broken wing butterfly, a 60-50 broken wing butterfly. And that has been for a very long time my go-to income trade. That was the first class I did where I teach all about how to trade this trade. And the reason I really like this trade is because it's pretty slow moving. It's something you don't have to pay a great deal of attention to. There's keys to when you put it on, when you get the best reward to risk ratio. And on the pullbacks that happened last week, I entered this trade. And as we can see, this trade is down ever so slightly right now. But what starts happening with this trade, this is a longer dated trade, out about 26 days, is I do some minor adjustments about once a week. If our market stays up where it is right now, I raise this upper wing a little bit. And now that will add a touch of risk to the downside, but the downside is quite a ways away. And each time I raise this right wing, I'm essentially assuring myself that I'm locking in profit if our market stays anywhere up in this range. It doesn't make any difference how high the market goes here. So long as the market stays above the center of this tent, I'm just locking in a little more profitability as this trade marches forward. Now, if you're new to the butterfly, again, right now, I'm trading a little bit more of the Flyagonal in the service. But again, the butterfly had been the quote unquote bread and butter, so to speak. for many years. So if you want to know more about that trade, I'm going to put a link on your screen right now to a free video. It's about a 15-minute long video that gives the 7 reasons why I really like the butterfly. Again, it does trade a little bit slow, but they're just a good, slow-paced, consistent income-generating trade. Of course, like any trade, that doesn't mean it always wins, but it's easy to adjust, easy to manage, and it's something that if you're working full-time, something along those lines, you can only look in on your trade every couple of days or so for a few minutes and make an adjustment. This is a good trade for that purpose. And then there's the wheel trade in PayPal, where I am selling puts waiting to be assigned. That trades up about $175 at this point, and I'm just continuing to roll that short put. And somewhere along the way, I'm likely to get assigned the stock. Once I do get assigned, my cost basis will be significantly lower because I will have sold those as the stock has marched along. So again, if I get assigned, for example, at $70 here, if I have sold puts for $1.50, $2, $3, and I've done that 3-4 times, my cost basis could be in the low 60s once I finally get assigned that stock. So that's it on the open positions. Again, my expectation is that this one will close this week. This one may very well close this week as well, and I'll look to open 1 or 2 new diagonals most likely. I won't rule out another butterfly there also, depending on market conditions, but we need to look for the right conditions for that specific trade. The right conditions largely being a little bit of a down move, a little bit of an increase in volatility. Where with the diagonal, it's less dependent on volatility because you have one side that's Vega positive and then the other side that is Vega negative. That's why those two work so well together. So with that, I'm going to wrap up the weekend update. I'll look forward to seeing everyone in the community during the week. Take care.